Hi, this is James Shug with Westpac London's end of day report for Friday, February the 3rd. A very positive day today for equity markets, mainly driven by economic data, although some good corporate news along the way as well. Things fired up in the UK with BT announcing an expected profit, or an upgrade to their profit expectations for the full year, expecting to make more than $6 billion for the first time. Largely due to the success they're having in terms of rolling out broadband to increasingly large numbers of customers. We had a services sector PMI for January for the UK. It jumped reasonably sharply, so it's still around 56. It's not, particularly flash, but it's ended a run of softer outcomes that were consistent with the economy actually being in recession at the end of last year. So at least at the start of 2012, there's an indication, and we saw it in the manufacturing equivalent survey, that the UK economy recession isn't at least deepening. May be ongoing, but very, very, very shallow. We'll get more guidance on that as the months go through, of course. In the US, though, it was the jobs numbers that really gave the markets a big boost. We saw a 243,000 increase in payroll employment in the month of January, about 100,000 more than the market had been looking for. Revisions were favourable. The unemployment rate fell to 8.3%, which was close to a 3-year low. The industry breakdown was pretty favourable. Distortions that might have made the December number, which was a strong one, not quite so healthy, related to couriers and a lot of extra work they're doing around Christmas time because of the internet. They were better adjusted for by the new seasonal factors, and so whichever way you sliced and diced it, it was really hard to find anything to complain about in the numbers. Hours worked were up, earnings were up. That'll support the household income numbers for the month of January. So it's a confirmation that the labour market really was shifting up a gear at the end of 2011, and so far it's continued into 2012. And that's what we're seeing with other data on the US economy. The services ISM was sharply stronger here in the US as well. So the overall message seems to be a continuation of this more positive data story out of the US economy. The question, of course, is how sustainable can it be? The 3-month trend for jobs growth in the US is still way down on what it was in the early part of 2011. And as we know, that very strong jobs growth back then really collapsed in the middle of 2011. Much like strength in jobs earlier in 2010 also weakened later in that year. This could be third time lucky, or, and this is our view at Westpac, perhaps more likely, this strength that we're currently seeing in jobs and other indicators of the economy may not persist because of the headwinds confronting the economy this year from fiscal policy, from Europe, from increased inclination to save on the part of consumers, tighter credit and so on. So, and still high unemployment, of course. So great numbers to look at for January. The market loved them, but just a note of caution about where they might head from here. Canadian jobs came out too. They're only up 2,000 in January, a much weaker story there. In Euroland, we actually saw some disappointing retail sales figures. They just continue to fall away month after month there. They're running at around about a 1.6% annual pace of decline in retail volumes in Europe. That's what they were doing in late 2008, when the European economy had already been in recession for a few quarters. So there's a bit of a sour note there on the data front today, but most of the rest of the data was pretty solid, particularly related to US jobs. And so given all that, we've got in the equity market space, a 1.8% gain on the FTSE just ahead of the close. The French market up 1.5%. The Germans up 1.7% today, and the Italians up 1% as well. No particularly fresh European news outside of the economic data I just mentioned to push the markets around today either. In terms of the Dow, it's currently trading at 1.1% higher at 12,849. Commodity markets, copper has done really well today, up 3%. The crude oil is up about 1/3%, at $96.65 a barrel, but gold's actually down 1% today, $1,742.50 an ounce. The Aussie dollar's done very well. It's continued to rise. It's at 1.077 against the US dollar, and a new cycle high or record high, whatever you want to call it, against the euro of 82.1 euro cents. So the Aussie is certainly a beneficiary of this idea that the global economy is doing better than expected, based on the services data, based on the jobs data in the US, and also benefiting from the increase in risk appetite that's flowing from that, and in some cases too, I'm sure, from the commodity stories that we're hearing about, the commodity price gains that we're hearing about. So that's about it. Important week next week. We've got the Reserve Bank interest rate decision, which we think they'll cut. We've got the Bank of England as well. We'll probably see an announcement of a further round of quantitative easing. ECB, we think, will hold pat for this month at least, but there's further easing on the way in some form or other from the European Central Bank before too long as well, we think. Okay, I'll leave it there for now, and back next week.